There are facts and figures which we can look at that will add to the story. We can also see those which only make it more confusing. It's important to see all statistics as part of the whole. You cannot measure the state of a country, particularly one as big as the US, with one number. It's simply impossible. Governments, however, use this number and request the media project this information out to the public when positive and hide it when negative. So let's take a deeper look at the most recent figures. You came here for the truth, so let me unveil that for you. Today we're going to look at the GDP lie. When you put lipstick on a pig, it's still lipstick on a pig. Okay, that's what we're looking at here today. This is the information directly from the BEA.gov, and you could see the stats. They brought them out, 3.2%. Rejoice, the economy is fantastic, but there's not so much information coming out that would actually give us the underlying cause of why this happens. You need to know what the GDP means. People are just saying, well, the economy is good. Economy, if it's positive, economy is good. If it's above expectations, economy is good. Not really understanding what the GDP is. They could probably tell you that it's gross domestic product, but what about what's actually happening within the economy to make the numbers actually this way, whether it's negative or positive? Most people simply don't know. This is the one underlying thing that I think about personally, and I agree with it. If the first quarter GDP report comes out, it's better than expected. As he says right here, Carl Tannenbaum, someone will have to explain to me why the Fed needs to ease in this environment. So something's going on. There's a disconnect in between what the Federal Reserve is doing, the central banks are doing, and what we see in the actual economy. There's a big divide that has been going on here. Many people will just say, let it go, just let them print. Why are you doing this? The inflation is low. If you really do believe that, I don't think this is the video for you. Have a nice day, and I will see you when I post a video about kittens. The big mystery in the GDP report, where did the inventories come from? This is an interesting article here. In fact, I believe I used this gentleman's article that he wrote a day or two prior to this, and it seemed to be very generic, very mainstream, out of Market Watch as well. What he said in here was that growth in the first quarter smashed expectations, fueled in part by strong inventory building. According to the government, $32 billion of goods were added to inventories this quarter, or $128 billion annualized. That's a lot of money. That's a lot of inventory that's going to be sitting there, and this would tell us that there's a stockpile that is forming. We see this very often in the news with oil. Whenever there's a stockpile that's too big, they freak out and they start to really have an impact on the prices we see of oil. Further along this article, he makes some good points. This stockpiling of goods boosted first quarter GDP growth at about 70 basis points and helped propel growth to 3.2%. That's well above the forecast. The problem is that it is not at all obvious where these inventories came from. Goods have to come from somewhere, either produced by domestic firms or imported from abroad. The mystery is that both production and imports fell in the first 3 months of this year. That's an interesting story. You can't stockpile what you do not import or do not produce. And that's according to the chief economist at this particular company. The Fed reported last week that industrial output slipped at a 0.3% annual rate in the first quarter. So we've got a few question marks here. Something needs to be answered. I thought that this chart would be quite informative for you, and you could see what has happened with GDP and the historic trend. So this here is the exponential regression, the red line as they show it. And you could see that over the years, after the financial crisis in particular, this started to lag. The growth is lagging. And why? Because we're running on QE, we're not running on real growth, real money. And you could see that it is actually 13.4% below the trend. We're far below it. We should have excessive growth right now, but instead we did not allow the economy to fix the problems that it had, and we didn't let the markets do so either, of course. And this has resulted in a very serious problem in the future. This will unfold quite badly. Further along in this Market Watcher article, he makes some more points. The government's GDP report estimates that imports fell 3.7% in the first 3 months of the year. The one other explanation, that consumption fell sharply enough to leave businesses with unexpected unsold goods, also doesn't fit the evidence. I mean, it's like a mystery, a murder mystery, trying to figure out where did these inventory stockpiles, that the thing that really did boost up that GDP, where did it come from? Consumption did not fall faster than industrial production or imports to generate any surplus. To be sure, spending on consumer durable goods fell 5.3%, the biggest drop in 10 years. Business spending on equipment was also weak. Any way you slice it, this GDP report is an apparent mess. Take this in and try to understand it. This doesn't make sense. GDP report is a lie. They have to actually explain it. Now, I'll show you in just a second. Actually, I'll wait to mention that because I have it open in the next tab. But we're looking at this right now, and it seems to be nothing but questions. There's more detail in here if you're interested in reading it. But you can see, as part of this, looking at this tells us that the actual data, because by the way, this is an estimate. The actual report will be provided May 30th, 2019. So you get the numbers initially that are estimates, and that's what gets into the media. Then they're revised lower at a later date, but nobody wants to cover that information. That information is like right at the back of the news. Nobody cares. And 9 times out of 10, it's revised lower. Okay? That's why they do so. They always boost it up. So we'll see how much lower this gets. I'm really interested this time around, that's for sure. But I just wanted to give you an idea of when we could be seeing the real truth, the reality actually coming out. Of course, I will do a video for you. And that's it. I just wanted to give you a breakdown of the GDP lie and show you what lipstick on a pig really looks like. If you found this video informative, I would really appreciate a thumbs up. We're digging into the truth, trying to uncover this detail, and of course we're taking flack the entire time. It's quite sad to see people who have turned, who have really gone over to this negativity, real negativity, instead of looking at information for what it is. It's just data. It's lines on a chart. It's information in graphs and articles, and it doesn't need to be really negative or positive or anything that I see on a daily basis. This is the information. You can take it, you can really breathe it in, and you decide what you want to do with it. That's all. If you want the financial education you weren't taught in school, these 2 books have everything you need from top to bottom, A to Z. You can check them out at the link in the description. If you want the audiobook, it's available at themoneygps.com. If you want to find out why the unemployment rate is fake, it's false, it's a lie, well then, you got to watch this video. I break it down very simply. So click on it and I will see you there.